The index closed the year up only 1.22% from a small 3-day rally last week. Let's look at the winners and losers for 2024 and what to look forward to in 2025. My name is Den Slim, and welcome to another episode of Monday Market Outlook. Coming into 2025, let's look at the GDP projections from the major economic agencies. The Philippines looking healthy with an average of 6.1 projected growth rate. Growth drivers for next year, we have government infrastructure spending as well as election-related spending, especially as we approach the midterm elections in May. Domestic consumption is also expected to recover, driven by low unemployment rate, which currently stands at 3.7%, and the potential rate easing cycle by the BSP. Now, having a young demographic also helps drive digital transformation with fast adoption of e-commerce and fintech platforms. Hopefully, Philippine tourism can also recover next year. Now, foreign direct investments are also a key driver due to improvements in the ease of doing business and the establishment of new economic zones. Now, of course, we also have to look at the risk factors for next year. We may have had a break from the political noise this holiday season, but as we draw closer to the campaign period starting Feb 11, the political noise from this year could resurface and even intensify. Inflation risk can also come back as food and energy prices can go up in 2025. Some factors include geopolitical tensions, they are still not over, and weather-related events can also affect rice prices. Lastly, the China economy remains weak and could dampen economic activity in the region. Now, but at least for the Southeast Asia region, we are expected to grow an average of 4.7%. With our neighbors not far off, inflation is expected to tick slightly up 3.1% by the end of next year. Meanwhile, the worry really here is that global food prices continue to go up. And considering that the weight of food, especially rice, comprises 38% of the Philippine CPI basket. Now, if sequential inflation continues at the present rate, we could potentially see inflation climb back to the 4.5% range next year. Now, this puts the rate easing cycle projections into question as the BSP might find itself in a tough spot by mid-2025, and they may be forced to pause rate cuts to keep inflation in check. Now, as we approach 2025, the PSEi had a mini rally to end 2024, up just 1.22% after peaking by 17.31% at one point back in October. A quick look at some of the oscillators here. The DMI shows a little bit of signs of buyers coming in. For a time there, while sellers were going down, look here, the buyers are also going down, but the recent uptick in the blue line here could show some promise. At these levels, the PSI oscillators, the RSI and the stochastics are at oversold levels where they have usually bottomed and could signal a potential rebound. The only concern right now is the lack of any market catalyst that could make any rally sustainable. On the longer term charts, the PSEi has been moving along this price channel. So technically, we could bounce off of the trend line support onto a choppy path, going towards 7,800 by the end of 2025 for a best case scenario. The 7,000 zone here, however, will continue to be a challenge for the markets as this has been a previous critical level. See here? And this also coincides with the 0.5 Fibonacci resistance. But all things considered, right, this year could have been a good year if you were able to take profits along this area because it made sense to do so, right? Because look at the resistance here at 7,500 where the market has previously rejected this 1, 2, 3 times. It made sense to take profits here. If you didn't, then, it's just a 1.22% gain, assuming that you followed the index performance. But on the downside, though, the support area can also be at 6,100. because the PSEi has actually been moving along this price range, no, 6.1 to 7.5 consistently for almost 5 years. Now, based on 2024 earnings per share, no, the market is actually trading one standard deviation below the PE average of 16.9. Now, the Philippine market remains one of the cheapest in the region, especially when compared to markets in China. The CSI index is currently at 1585. The Nikkei index, Japan, is 20.85. We have Australia, Indonesia, and Malaysia. Earnings per share have actually resumed an upward trajectory since the dip during the pandemic period. And as the earnings per share goes up in the following year, so will the markets become much cheaper if we maintain the current PE ratio. The Philippine peso, meanwhile, appreciating to 57.91 last week, but could still face pressure from the US dollar. The currency pair is sitting on the 100-day EMA, where it bounced off last time before surging back to a high of 59.11. And with the possibility of less rate cuts in 2025, currency weakness could also be a risk factor moving forward. Though the peso did appreciate breaching the 100 EMA, hopefully it can maintain this level in the last few days of the year. Now, let's look at the winners, the index winners and losers for 2024. For the top index stocks of 2024, we have Converge gaining a whopping 92.6% for 2024. Congratulations if you're able to catch this. ICT is at second with a 60% gain this year. Of course, we have Metrobank, CNPF, Globe, Meralco, BPI, LTG, SCC, and Pure Gold completing the top 10. We also have familiar names like GTCAP, BDO, DMC, and JFC. Now, we do have the banking stocks outperforming this year, and our property sector bet did not materialize as we see the worst performers of 2024, with Bloom dropping a whopping 53.27%, followed by familiar names, JGS, Nickel, Wilcon, URC, AEV. Surprisingly, we have the property stocks SMPH and Ali ending the year with a sharp pullback to push them into the worst performing category. So we also have AGI, EMI, AC, ASEN, and SM completing the list right now. So for 2025, let's look at some possible portfolio strategies that you can consider. Now, let's start with the DOGS strategy, right? The DOGS strategy, this play here involves equally investing in the 10 worst performing stocks of the previous year and holding them until a new set of laggard emerges. Now, the thinking here is that good companies, blue chip companies, rarely underperform 2 years in a row. It's simple, it's low maintenance, historically it's also effective, and has often outperformed the index. Now, last year's DOGS, if we look back at 2023, they actually initially outperformed the market, but they lost gains due to the recent market weakness. But if you actually took profits at the right point, at 7,500, you could have been on top, right? Now, this year may also challenge the strategy as we enter into 2025, which could be a bit volatile. But if you actually choose wisely, you can find some potential diamonds in the rough, right? Converge was actually a dog last year. Also, Globe, Pure Gold, DMC, Monde, they actually did quite well, right? Now, if we look at the performance of the dog strategy, if you held on to these stocks until year end, these sets of stocks underperformed the market 0.23% negative, while the PSEi did perform at 1.22%. For 2024, going back to the worst performers here, while we are supposed to rarely see blue chip companies underperform 2 years in a row, right? But we can see familiar names, JGS, Nickel, Wilcon, URC, AEV. They were also dogs in 2023. With the potential listing of Nickel and Wilcon, we can probably consider pushing up AC and EMI, but I don't recommend EMI though, and we could maybe consider ASEN. Can these blue chip companies underperform 3 years in a row? And of course, people will say that's highly unlikely, right? So maybe there's some merit to the strategy. Bloom could actually see the bottom already and has the potential to bounce back next year as they start to recover from the Soler North expansion. Remember, the gaming revenues share of PagCore will be reduced starting next year. So we could see some upside for Bloom. Now, AEV, could Union Bank finally turn around in 2025? Can the Coke business also start to earn money? Of course, SMPH and Ali, ridiculously cheap at this point. AC also not a bad choice. So maybe these dogs may outperform the index in 2025. Now, in contrast to the dog's strategy, on the other end of the spectrum, you can also consider a momentum-based strategy, right? We've all heard the saying that the trend is your friend until it bends. And buying assets, buying stocks, no, with upward trends leverages on the tendency of prices, no, to continue in the same direction over a period of time. On your screener, currently, if you screen for stocks whose price is above their EMA, 20, 50, 100, 200, with a market cap of at least 2 billion and above, with significant volume, and at least they should be making money, right, with positive net income. We can see some interesting names. We could ride the trend coming into 2025. Now, my top picks here would be Plus, STI, China Bank, Keeper, Manila Water, Meralco, SecB, Globe, LTG, SCC, Pure Gold, JFC, AP, and FCG. Momentum-based trading like this is on a much shorter term, so the list does change quite often throughout the year. It doesn't mean you have to trade them on and off, but usually there will be names here that will consistently be on the list for a long time, like Meralco, China Bank, Plus, STI, Keeper, and JFC has actually been on the list for the whole year. And ICT is also part of the list, but with its current consolidation, the screener doesn't show it, but it has been on the momentum list for like more than 2 years already. You can ride the trend and easily outperform the index by selecting momentum-based names, no, from the market. Lastly, we can also look at a more fundamentally based selection, right? Given the macroeconomic outlook for the Philippines, we could formulate some preferred sectors, no, for 2025. As consumer confidence is expected to improve, consumer goods stocks could benefit. As the dollar remains strong, dollar earners may continue to outperform, like ICT, right? The financial sector could also outperform. If inflation remains sticky, BSP keep rates high, banks could still enjoy decent net interest margins. On the other side of the coin, high loan demand could provide growth if rates decline, no? Finally, defensive sectors are also a good hedge against any political uncertainty. If we put this together, we can actually see some recurring names, no, from the different strategies. We see here the top consumer picks, right? JFC, Monde, CNPF, and Pure Gold, right? We could also continue to bet on financials if the rate easing cycle will not be as fast, right? BPI, BDO, Metrobank, and China Bank with its inclusion in the index. Utilities, Manila Water is always our top pick for now. AP also a secondary pick. Dollar earners, ICT, maybe. Apex could also do well in 2025 as gold is projected to reach 3,000. No? C-REIT, if office space is going to be an issue among the REITs, C-REIT is immune to that. The dogs from last year, Bloom, AEV, Ali, SMPH, AC, ASEN. If you want, you can include the other names, JGS, SMC. For momentum-based stocks, we have Figaro Coffee, Keeper, Plus, LTG, STI, GT Cap, Meralco, SecB, Globe, SCC, right? So we have some interesting names here that we will continue to monitor in 2025. And as we bring 2024 to a close, hopefully, the channel was able to bring value to your investment journey. Let's continue our market outlook for 2025 as I take a break next week, and we'll resume the episode on Gen 12, no, on Sunday. But for now, let's enjoy the rest of the year. Here's to another profitable year in the markets. Remember to like this video if you found the information useful. Please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. Happy New Year to everyone. I'll see you again next year. Bye-bye.